long time. Says we're live. Oh, let's go. All right. All right. So welcome back, everybody. It's crazy. I promised that the 100th stream was going to be the last YouTube stream that I ever did. And here I am. Can't stay away. It's called Chart Addicts for a reason. So we're really committed to this craft, really committed to providing as much value as possible. So welcome back to the channel. My name is Roy Jr. I'm your host. I'm the co-founder of ChartAddicts, the #1 education service in the world for traders. We're going to be doing a Forex workshop tonight, pretty straightforward. I'm going to give you guys a quick breakdown on who I am. I'm going to give you guys a breakdown on Forex, just the overall game and what is the objective here. It's important to go back to the basics and to understand, is the objective to win every trade, to get as many pips, to get the best risk and reward? What is the big picture objective of what we're trying to do here as Forex traders? We'll talk about trading emotions and discipline, having a systematic approach and the importance of a systematic approach. And then we'll talk about technical mastery and some things that I feel like everybody should know. So welcome, 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 welcome. So real quick, let me know, everybody in the chats, where you guys calling in from. Says Big Boy Roy, missed you, man. I missed you guys too. It's good to be back on YouTube. We've been doing our thing in the Chart Addicts community, man. We've been getting ready. All of December, we were kind of focused on doing annual reviews, looking at our trading for 2022. And then January, we were preparing for the Federal Reserve, the first Fed meeting. Finally got that out of the way. Now the markets are moving. I have so many trade ideas lined up for next week. It's unbelievable. Euro, USD, NASDAQ, the dollar. So I'm doing amazing. Chart Addicts community, we're about to go ham the next 2 or 3 weeks. So I'm looking forward to it. Okay. So this is going to be weekly, and this is not going to be weekly. I might never do a live stream again. I'd have a pen and a piece of paper out if I were you. He said, Nas Killer back at it. Thanks for the value out of San Antonio. You guys already know what the deal is. Can you save this live? No, it might disappear forever. Get a pen. I'm telling you. Sydney, Australia, New York City, Orlando, Chi City, San Diego. Oh, another cool thing is we're trying to do like a nationwide tour. We're trying to go to 4 or 5 cities in the next month and do live classes. The reason I'm asking you guys where you're from is I'm trying to gauge where should we go do these live classes. They are free, absolutely free to attend. And we're trying to figure out where we should go and do these live classes. Maybe we'll get food and drinks after and just kind of make a whole event out of it. But just let me know where you guys are from and where we should go do these live classes. Bianca, what, these people crazy or what? They're like, can you save the live, brother? Brother, I might get hit by a bus tomorrow. Like, who knows? You gotta take these notes. You gotta grab a pen. Can't make this stuff up. He said FX Summit 2023. FX Summit 2023 is going to be incredible, of course. You guys know the drill. Houston was on the list. Houston and Dallas, we were kind of debating between both. We might have to do both. Atlanta's on the list. New York was on the list. And then California was on the list. Two-step George, where are you from in California? Might have said the DMV, bro, look, I'll never forget where I'm from. I'm from the DMV. You know what? We might go back to the DMV. We might go back to the DMV. Who knows? We might go back to fucking George Mason and just, shut it down. We got to do a VCU one. Shit, Midas, you want to help me set it up? Get me a room in Hibbs Hall. The big one, the auditorium with the screen. And we'll pack it out. Reach out to a bunch of old folks and see if we can get something going. He said Northern California. I don't know nothing about that. Anytime you're on, I need a pen and pad. Bianca, I'm going to save this live for the Chart Addicts members. Well, I can make it happen if you're serious. My advisor mentor still works there. Midas, let's set it up. Let's see how many people we can get. Hit up the business school. Let's make it happen. Bianca says Las Vegas, Nevada. Oh my God, I might get lost and never come back. I don't know if we can do that. All right, I'm looking at this chat on YouTube real quick. I see California, Chicago. Chicago, I've been meaning to go to Chicago. LA, I don't really know if I want to go to LA for real. San Diego's underrated, one of the most beautiful places in America, hands down. He said Pakistan, Babar. We're going to circle back to that. Mexico, South Africa, New York, Houston, Chicago, North Carolina, Chicago. Shit, Swag Academy or Skag Academy. Damn. What's up? What's going on? What's going on? What's going on? Good to see you guys. So we're doing these live classes. If you guys are in this city, make sure you pull up. Said no LA. Come on, guys. All right, we're going to do a DMV one for sure then. Let's make it happen. All right, so you guys know the agenda for today. Very straightforward. We're doing a Forex workshop. We got an overview of Forex trading emotions and the importance of discipline, having a systematic approach. You cannot get consistent results without a consistent strategy. And then in technical mastery. All right, if you guys have any questions, drop them in the chat whenever you guys feel like you guys have a question. I'll periodically go back and check the chats, make sure that we answer them. If you guys give me 1 second to fix this setting real quick. All right, we should be good. All right, so real quick, background on who I am. My name is Roy Dunya. I'm the co-founder of a company called ChartAddicts. We originally focused on coaching for retail traders and Forex, but now we really just focus on a live trading environment and showing you guys how to do this thing every step of the process. Sort of building a plan that you can trust, building your own strategy, making sure that you're practicing the execution and the practicality of the strategy, and then making sure that you're optimizing. So a big part of having a systematic approach, which is what we try to focus on the most, is optimizing over time. Okay, you have a strategy, you're getting the results that you're getting now. What are the improvements that you need to make? And so some part of it is actually looking at numbers and some part of it is looking at behavior. And through the combination of both of those things, looking at the qualitative and the quantitative analysis, you're able to figure out what the best path forward is. So you really can't be shooting in the dark when you're trying to improve at a skill set where you can measure the numbers. And you can't improve what you can't measure. And so it's very important to have a systematic approach. That way you're doing the same thing over and over again. That way you can look at those variables and get some very important insight. If you're constantly switching strategies, if you're constantly, 1 week you're swing trading, 1 week you're scalping, 1 week you're closing early, 1 week you're holding trades, you're very inconsistent, you're going to have a hard time getting consistent results. So we're going to talk about a few of these things. So my background is, I'm a co-founder of ChartAddicts. We're an education service. We focus on live trading. I used to work as a private wealth manager at Merrill Lynch, which is a Bank of America company. I basically just helped rich people manage their money. I worked in the ultra high net worth division. And basically, I just had my Series 7, Series 66 licenses. I was a licensed broker, financial advisor, taking trades, calling my clients, moving their money around, making sure that they were protected for the long term and for retirement and to meet their financial goals. Okay. Previously, before that, I've had, huge experience doing a bunch of other stuff. We can get into it some other time. But in 2021, I quit my job. I've been trading since 2016. I know I'm kind of inconsistent with the timeline here, but 2016, I used to trade crypto. I was working at the NIH. I ended up finding out about Forex. I started learning how to trade Forex. In 2021, I quit my job at Merrill Lynch in order to trade Forex full time. In 2022, I really took my trading to the next level. And now 2023, I'm looking to get over $1 million in funding this year from different prop firms and various personal sources. And I'm looking to see where I can take my trading over the next 2, 3, 4 years. Very excited to have you guys on the journey. I've been live trading for a few years on YouTube, and some of you guys might know us and might know my face or my voice from the Expert Trader podcast, which is one of the biggest trading podcasts around. Good to meet you guys. Let's get right into the curriculum. So what is Forex? Everybody thinks that you're in this game to focus on money, right? Because the whole point of trading Forex is to make money. Here's kind of like the secret that nobody wants to tell you. The only way to systematically and to consistently make money trading is to focus on a process as opposed to focusing on a result. And so I'm going to give you guys an example of 2 different traders, and hopefully by illustrating this example, you guys can have a very clear idea of which one of these 2 traders that you want to be like. Okay, because you have a path as a Forex trader. You can be a gambler or you can be a trader. You can have a systematic approach or you can keep trying to wing it. You can look at your results honestly and you can make the adjustments that you need, or you can continue to kind of play it by ear and just sort of hope for the best. And so ideally, you know, one of these guys or gals not looking at their trading results, doesn't have a trading plan, doesn't have a strict risk model that they're following. Like, how many trades are you taking for the week? How many, trades in a row can you lose before you walk away? What's your maximum daily loss? What's your maximum weekly loss? So there's some traders that have a systematic approach, and there's some traders that are sort of playing it by ear. They know a few strategies. So you might have learned a multiple confluence strategy. You might have learned Elliott waves. You might have learned Wyckoff. You might have learned a little bit of ICT or whatever the fuck, smart money concepts. And so you're just looking for patterns in the charts, and you're just sort of hoping for the best with these patterns. You don't really look for the same thing every time. You don't look for something that's like a layup strategy that can consistently yield you profits. You're looking for home runs. You're looking for random, always guessing the top, guessing the bottoms, just never really having any consistency. This person can stay on the cycle for years. Okay, years. And just when you're on the edge of refining your strategy, you get into a losing streak, you stop that whole strategy and you move on to the next one. The other trader has a plan. Okay, your plan defines your trading strategy, which is your edge. Your edge as a trader is basically, what is that thing that you're looking for in the markets that's going to consistently yield you money? The markets are going to present you with a bunch of opportunities. So if you're a technical trader, you're looking for certain opportunities in the structure of the trend, in the specific volume of the price action, with a multiple confirmations using indicators or whatever it is. Your job is to find these inefficiencies in the market where you're getting ahead of the price. The price is all the way down here somewhere, and you think it's going to end up here, and you're guessing. Not really guessing, but you're sort of getting ahead of the price and making a prediction on what you feel like the market's going to do next. Your edge is a systematic approach that will allow you to do that consistently, not just a few times and every once in a while, but consistently. And so your trading plan should define your edge. Your trading plan should define your risk. And your trading plan should define your behaviors. The trading plan is supposed to be built on all of your previous history. It's very hard to build a good trading plan without experience. And so the part that most people don't tell you is that you really need experience in order to be successful in trading. Now, you can cut your experience from a 2-year process to a 4-month process, but you do need to go through the trials of funding an account, taking wins, getting losses, being on a win streak, being on a losing streak, having 6 weeks of consistent profits and then losing a bunch at one time, so that you can understand the mistakes that you need to avoid. Now, the beauty of having somebody that you can learn from is that you can cut those mistakes out from learning from them. If they told you, hey, I just burned my hand on the stove, it's in your best interest not to go put your hand on that same stove. That's how you can, improve your learning curve and basically cut the time that it takes for you to be successful in half, or a lot shorter. For me, my process took me a few years to get down because I was trying to fight the process the whole time. As soon as I took my lessons, I realized, am I closing my trades early? Is my relationship to money messing with my results? Is my personal financial circumstance impacting my decision-making on the charts? And once I realized that all these things were true, I basically let all of that go. I was able to look at my strategy honestly and say, my strategy works, but I am not letting it work because I keep stepping in the way. And as soon as I'm able to step out of my own way and just trade my strategy with the best discipline that I can, that's when my trading is going to take off. And that's exactly what happened. And then you have a few months of consistency where you're making profits, and you're sitting there like, you have this feeling like, is this going to sustain? And then you realize that the more that I focus on this consistent systematic approach that will allow me consistency in my results, the more I focus on this stuff, the more the money just showed up. The more I focused on the money, the more I was in this cycle. You make money, you get a little greedy, you blow some of it back, you're in this break-even mode, right? You win a bunch of trades in a row, and then a few trades, you lose it all. So it's like the losing streaks get to you, the winning streaks hold you back. So it's really important to sort of take all of this, maybe put it somewhere on paper, and make sure that you have a trading plan that you can trust. Okay? Now, is everybody still with me? Or are we falling asleep? What's going on here? Are we good? There's two ways to trade, people. I've tried to beat the system. I never tracked my trades. I never freaking, journaled. I would take screenshots and I was like, oh, screenshots good. I wasn't taking this seriously. And it took me a long time to become successful because of that. Now, at some point, you start to realize if I want to level up and I really want to be successful in a game that has a very small percentage of winners, right? Where the attrition rate is horrible. So basically, it's a very competitive market. I have to take this as seriously as somebody who's competing in, let's say, a competitive sport or any type of, very serious endeavor. So that's a very important thing about how to look at Forex. Now let's talk about trading emotions. As a Forex trader, you're going to seesaw between two very basic emotions. We're going to wrap this thing up here pretty soon. Trading emotions. On one end, we have fear. On this end, we have greed. In the middle is the combination between both, which is FOMO. This is fear and greed. You're scared that you're going to miss out and everyone's going to make money without you. There's fear and greed at the same time. And then there's another layer here that I don't know how else to describe except for ego. Okay. So these are the four things that you're going to battle as a trader. And if you're new to trading, you don't really know what this means, and you're not going to really understand what this means until you're in a trade. I've talked to a lot of smart people that really underestimated how much it takes to be successful in trading. These guys were engineers. Some of these guys were in the medical field. Some of these folks were lawyers, very, very smart people. And they thought that they were very disciplined. They thought that they had the emotional control to not get involved in the outcome of these trades. I told them up front the strategy, the systematic approach. We built a trading plan, and then they opened their first trade. And what do you guys think happened? The second that the drawdown hit, the entire mindset changed. Their perspective on what their decision-making was supposed to be completely went out the window. So no matter how smart you are, you have to realize that being human means that you're susceptible to these emotional circumstances. And understanding and having a framework for how to deal with these emotional circumstances is going to make or break you as a trader. All it takes to be a good trader is to have a good system and then to be disciplined enough to not deviate from the system. And to do that long enough without thinking that you're better than you think you are. That's what real success is in trading. You have a good system that works and you're able to do that over and over and over again without losing any enthusiasm, without losing any discipline, without getting bored. Now, along the way, you're going to start to battle these different emotions: fear, greed, and ego. Now, I'll let you guys know that fear, any of these is actually very easy to deal with if you take an analytical approach to this. So, for example, if you're scared to get into a trade, you have to start asking yourself a set of questions. And so what I would include in my trading plan, if one of my big problems was fear, is what am I scared of? What's the worst that can happen? Have I accepted my risk on this trade? So you're taking a trade where you're going to be risking $300, $400, $500, $1,000. And you haven't really accepted the fact that there's an $800 risk or a $500 risk on this trade. Now, all of a sudden, you get in the position, you thought that you were risking a couple $100, $300. It's only a couple lots. All of a sudden, you're in drawdown $500, $600, or you see a massive loss in your account. And you're just like, oh my God, how could this have happened? What's going on here? And so not understanding and accepting the risk leads to fear. I would be anxious too if I didn't know how much money I was going to lose. And so there's these questions that you can always ask yourself to determine the root cause of these emotions. Now, having emotions is normal. Your job as a trader is not to eliminate emotions. Part of life is having emotions. You're happy. You're not happy. You're excited. You're inspired. Emotions are a beauty of life, but that doesn't mean that you have to act according to those emotions. So your behavioral response and your emotional response are not the same thing. As a trader, you will be presented a lot of opportunities to be tested on these different emotional states. And once you're in these emotional states, your ability to regain control and your ability to maintain discipline in these times is what makes you a great trader. Okay? And so you have to set up guardrails for yourself, et cetera, et cetera. If you know you're a greedy bastard, for example, make sure that you put that in your plan. Say after 3 trades, delete the account, delete the app, right? After 4 trades, get rid of it. 3 losses, take the money out the account. It might be extreme for you, or it might be something that you just have to make some slight adjustments. Regardless of where you are on that spectrum, the level of, proactivity that you're going to have to show is going to be a lot higher depending on, where you fall on that spectrum. If you're a stubborn person, you're going to have to do a lot more to protect yourself from you. If you're not a stubborn person, you have a good amount of discipline, you're very flexible, then you're not going to be as aggressive, and you can just set a few guidelines for yourself and keep yourself in check. All right. So here's the emotions. Greed is because you just want to make the money now. It's not coming now. Write this for your notes. And this is something you'll have to underline. The day you plant the seed is not the day you eat the fruit. That's what trading is. You enter the trade. It's not going to pay you when you want. The market is going to move when it wants. If you have a strategy and you trust the strategy, then you will wait long enough in order for that to happen. If you're trying to impose your will on the markets, you will constantly be frustrated because you can never impose your will on the markets. It's like screaming at a mountain to move. And you're just going to sit there for the rest of the time, sitting there trying to impose your will on the markets, screaming at this mountain, instead of understanding that, the market just is. It has its own mechanics. It has its own flow. It makes its own decisions. Your job is to understand it and then to trade in harmony with that market. A lot of people are trading at odds, very uncomfortable with the market. And that's why you're not able to sort of flow with the trades. That's a little kind of out there kind of stuff. Everyone hit the like button. You already know. Take serious control, discipline. It must be rinse and repeat. Exactly. So you have these, if you're an adventurous person, if you're a gambler, if you like to take risks, if you're an adrenaline junkie, whatever it might be, get those emotions out somewhere else. Find a hobby. Stay busy. Make sure that whatever you're doing, you are not bringing that in with you to your trading. So your emotional problems, your personal financial problems, the goals that you have financially and for your life and for your future, all of these different things that have nothing to do with the current trades sometimes play into our decision making. Oh, I wanted to buy this thing and it costs X amount, or I'm in this debt, or I have this financial burden, and I see this $1,200 on the screen. I should take this $1,200, out of this trade because I need the money because of these real life financial circumstances. When in reality, that trade could have kept running for 2, 3, 4, or 5 times the reward that you took out. And there's a big difference if you needed the 1,200 versus getting 5,000. But we're making decisions based on external factors that have nothing to do with trading, and that all of that needs to be left at the door. You have to remove that baggage and basically just focus one trade at a time, one day at a time, not trading every day, but just sort of taking things one step at a time and managing these emotions as best as possible, and realizing that your job as a Forex trader is to be as disciplined as you can possibly be. Because the people that are getting funded, the people that are trading the biggest accounts, the people that are getting backed by investors, the number one trait across all of the winning traders that I have the privilege of being around, myself included, is the ability to be disciplined. The ability to just do the same thing over and over again. People, I've been in this trading game for years. There's been times where I got bored and I started to over leverage or over trade and just try different strategies. Right now, I'm really just focused on honing in a strategy that I can consistently deploy with, using less trades. I don't want to take a bunch of trades anymore. I want to take a few trades that are going to make me way more money. Leveraging. That's what we're here for. That way I can use my time to do more productive things, like building the FX Summit conference for the industry. So being a Forex trader means that you are disciplined enough to have this skill set that you walk around with like a superpower. But the ability to deploy it in a very disciplined and methodical and strategic way is what we get paid for. And then the ability to not have to spend all day staring at charts and not have to take a million trades, but to leverage these strategies to be able to get more out of using less work so that we can spend more of our time doing incredible things for the world, which is what ultimately we're all here for. Okay, God did not put you on this earth to trade at a computer. All right. He gave you the intellect and he gave you the insight and he gave you the opportunity to be able to learn a skill set that you can do something with. But it's your prerogative to go figure out what is your contribution to the world and to use money as an instrument of change to bring on whatever that thing is. All right. So it is all about the money because money does fuel a lot of those things that you want to do. But obviously you have a bigger purpose. And so that you have to make sure that you guys are living up to that purpose too. All right. When is the Raul video out? Bro, YouTube is messing with us seriously bad. Joining the VIP Chart Addicts community, so much value. Real talk. Yep. So basically, yo, that's overall trading. Having a systematic approach. We've been talking about this all night. Trading emotions. You have fear, greed, FOMO, and ego. Ego is, I don't want anyone to see me losing. Ego is, what if people find out that I lost and they think I'm not a good trader? What if I'm not making that much money yet, so I don't want to like tell anybody I'm a trader or anything like that. Making decisions out of just ego. Let it go. You're not that important. A good example, I forgot whose podcast it was. They said the Queen died and they posted about her for 12 hours. 12 hours, 2 days. That was like the last little conversation and it was done. Her family ruled all of England, had amassed all of the wealth of the United Kingdom. 12 hours. Okay? Nobody gives a fuck. So let it go. Big part. You can't have ego in trading. You got to let that shit go. Nobody gives a fuck. All right. So if we're going to talk about technicals, I just want to walk you guys through where we're at right now. I'm going to be doing this pretty quickly because there are championship fights going on tonight. And I'm going to be completely honest. I'm watching the Volkanovski and Islam Makhachev fight. I'm going to see the double champ and see who gets crowned. So I just want to walk you guys through what's happening in the economy. We'll talk about a few charts that are very key. And I want you guys to keep your eye on. Let me know if you have any questions, comments, or concerns. Oh, wait, real quick, halfway through the stream. FX Summit 2020. What am I? Timeout. The FX Summit 2023, there we go. The FX Summit 2023 conference is the #1 conference for traders, investors, and crypto lovers. This is a conference that we put on. It's going to be an annual event that we put on every single year. Last year, we had big names such as TradingView, Awanda, Huobi Global, some top crypto exchanges and other top traders, Q Banks, Lambo Raul, FX Alex G, and almost everybody that you guys would recognize came to this conference. This year, it's going to be June 9th to the 11th in Miami Beach, Florida. We got about 3 months left, so make sure that you guys are grabbing your tickets. The tickets are the cheapest now. They will be going up next month and the month after. Use promo code ChartAddicts for a discount on your tickets. If you guys are watching this stream, congratulations. But the FX Summit 2023 conference, June 9th to the 11th. I'm going to see you guys there in person. All right. Side note. Few charts that are very important. #1, PCE. Personal consumption expenditures is the #1 inflation measure for the Federal Reserve. So the Federal Reserve controls monetary policy for the entire economy. So it moves currencies all over the world because people make decisions based on the dollar and the dollar status compared to other currencies. So there's CPI, which is one of the initial measures of inflation, which is what a lot of economists use. And then there's the PCE, which is the personal consumption expenditures, which is a more in-depth sort of it's a more detailed version of the CPI report, and it gives just a better outlook for the Federal Reserve to be able to use this as a measure of inflation. You guys can see that since the pandemic, we had a massive dip down in inflation. We've been consistently pushing higher. And then even though the Federal Reserve has been trying their best to get inflation down, we haven't really seen much. So since October of 2022, this only goes until December. But we've seen a slight dip down, but nothing consequential. You look at the 5 years, we're still treading up. And so the Federal Reserve has a long way to go to get inflation back under control. And so it's important to realize that, we've had this momentary pause where the markets are recovering, Bitcoin is recovering, everybody expects a soft landing, that we're going to avoid a recession. But there's a very good chance that we're going to enter a recession this year because the Federal Reserve has to get inflation back under control. And in order for them to turn around this, steam engine, this train that's moving at 100 miles an hour, they're going to have to do something very severe to get it to turn back around. And the more aggressive that the Federal Reserve gets, the deeper the recession will be. All right. So the PCE chart, you guys can find this on the Federal Reserve Economic Data website, the Fred at St. Louis, or the fred.stlouis.org. You guys can find all these charts here on the Federal Reserve's website. The second important thing to note is employment. I want you guys to kind of take a note of this. One of my biggest strengths has always been noticing the biggest dynamics of the year to watch out for. If you can watch for these key data points, you can basically keep your eye on the news and keep your eye on the things that are going to move markets in the long term. The unemployment rate is one of the most important things that's going to be talked about this year. I'm going to make a prediction for 2023. Last year, it was inflation. Last year, it was transitory. Last year, it was, quantitative tightening. The word was pivot. This year, I think the word is soft landing, and another major dynamic is going to be employment. So right now we have record low employment. The last time we were at this level is in the 1960s. We got down to 3.4%. So 3.4% means 96% of all the people who are able and willing to work have a job. That's really good. So we're operating as close to maximum capacity as possible, which is going to allow us to have more output. And that's what we want. You want your economy to grow. And so there's two very important things happening. One is that prices are still going up. Expenses are still getting higher. The eggs, everyone's joking about the price of eggs. It's real. All right. If you have enough money to pay for that difference, you're fine. If you don't, it's putting a serious strain on your budget, and it's going to end up really, really causing some pain in the next 2, 3, 4, 5, 6 months. So the only good news is that employment is still strong. And so we're not in a recession. But here's the thing. Whenever employment is this low, what comes right after? Okay, that's when you have the unemployment spikes. That's when you have the unemployment spikes. Whenever you have a massive dip, that's when you get the unemployment spikes. And so markets move in waves, and we're very close to the bottom of this cycle. And so the market could move back up. And so a recession this year is to be expected. And the labor market is the most important thing to watch. As soon as people start to lose their jobs, that's when inflation is going to start to come down. There is no soft landing in this scenario, but there's a medium soft landing. So here's a soft landing in people's mind as you're trying to land the plane, and it's like the smoothest landing ever. Have you guys ever been on a plane and tries to land and starts to wobble, and you're praying for dear life, and you're grabbing the person next to you, and you're like, this person gets paid 6 figures for this shit to land the plane like this? Okay, that rough landing that kind of gives you a heart attack. That's just like, oh, that was a fucking close one. Maybe you saw some sparks fly next to you. That's the kind of landing that I'm looking to see this year. We're not going to crash and burn, right? We could if the pilot completely loses control. But more than likely, it's going to be one of those rough landing scenarios. And that's what I see happening in the economy this year. All right. So, what happened to the Lambo Raul video? I'm going to say YouTube is trying to censor us. They don't want you guys to get the heat. All right. So I don't know what the fuck is going on, but YouTube has been blocking the video all day. I sent it to my editing team. They're working on it. We're going to try to get it launched by tonight, but there's no guarantees. You guys know the drill. All right. So the dollar play, this is something that I've been calling for a few months. If you guys follow me on any social medias, you'll have seen me post about this. Dollar is at the 100 level. So typically the dollar basically chills anywhere between 96 and 99. This is like the range for the dollar. We've gotten way off board, and then now we're at this sort of pinnacle moment to see whether or not the market is going to continue to the upside, or whether we're going to break back down and fall back below this whole range. Are we going to come back and play in the 96 and 99 range, or are we going to continue to play in the 100 and 114s? I think that we have one more push up to 107. And so I'm expecting the dollar to push bullish, which means that, if you look at currency correlations, Euro USD shorts, GU shorts, you guys get the drill. ChartAddicts members, you guys know this stuff. Pretty straightforward. I'm also looking at, US 30, for example, where can the dollar and US 30 go bullish at the same time? The answer is yes. We look at the higher time frames, and then here's US 30. So US 30 has consistently been making higher lows, higher lows, higher lows. All of last year, we've had a bear market because of the quantitative tightening, the reduction of money in the system. And then we've just recently started to have a bit of a shift in momentum. So you guys can see this massive bullish push here that broke above these highs, massive bullish shift in momentum. And then now we're starting to create this new support right here. So previous area of support before we saw this push to the upside, area of support right here before this bounce, resistance, resistance. I don't even know what to call that. Support again. Price is at a very important zone for US 30 because if we continue to form support here, the next move is a push to the upside, an equal move to this. Is this simple? Negative 61 extension, A, B, C, and D formation. So typically you'll have like two moves that are very parallel to each other as part of, that trend. So if this thing's going to continue, it'll come back down, one more push down to 32,800 and then continue pushing. So 32,800, remember that number. That's what I'm looking at. So here's what I'm seeing on the smaller time frames daily for US 30. Massive bullish push here. And then we got a retest of this area right here. New floor. Massive bullish expansion. Closure above this high. Came back to retest higher low of the same level right here. And then we had a push to the upside. The reason that this is a little bit frustrating to trade is this week I'm actually looking for shorts around the 34,000 area. So right now price is coming up to retest this area right here. So two things happen is if we break above these candle highs, then I'm expecting the market to make that nice bullish push that we just talked about. But I will be shorting this. Now, the only thing that's giving me pause is just like we had all the support right here before that expansion, the market is creating support at this new level. Okay. So that's why I think that there's a few options here where the market is going to come up for one more top. And then we get a sell-off. And of course, if we get a closure above the 34,000 area, then the market's going to make those longs and we can look for some buy positions above this range. So for now on the higher time frames, we have a sell area here, sell area here, sell area here, sell area here. Even though we're creating that support that we just talked about, okay, we're creating that support. Highs are still getting lower. Price is still in a bearish trend. We still formed lower lows. And so as long as price closes below this area right here, we can see a push to the downside. So I think in the immediate term, very obvious, we're going to get this move. But once price gets here, are we going to see this push or are we going to see a full break? And I think the full break is my prediction. All right. We don't predict, we react. We'll see. Ladies, gents, anybody have any questions, comments, concerns? Euro USD, very simple. You guys know the drill. We broke below these highs. We broke below the fair value gap right here. We've already established some bearish intent. Double bottom right here, quick retest and push to the next level. I have a 2-to-1 trade sitting right at the gate. The second the market opens, I need 2 4-hour candles to push up here. I need one of them to push up to the 78 and just knock some liquidity out. And then I want to take that trade. All right. If the market pushes back above and creates these new highs, Then we'll take another short at 1.08. You guys know the drill. ChartAddicts members, I'm going to send all this out. Sunday market outlook style. Very obvious moves. The Euro USD is, clearly massive bearish shift. 3 drive pattern and a bearish engulfing. And I think that price has a long way to go. So this is the kind of stuff that we're looking for. We're looking for these shifts in market momentum, and this is it. So keep an eye out for Euro USD shorts. Very important that we catch that move. NASDAQ, we'll cover this on Sunday Market Outlook tomorrow for VIP members. No, I got something special for you guys on NASDAQ. So yep, US 30 expecting it to break through the zone. You guys get the drill. Ladies and gentlemen, that concludes our Saturday stream. It's great to see all of you guys on this stream. If you guys are watching this on YouTube, make sure you guys hit the like and subscribe button. Make sure that you guys ring the notification bell so you guys get updates on all the new content. Chart Addicts members, I've seen y'all twice today. I've seen you guys putting on serious work. So if I've seen you on 2 calls today for the Chart Addicts team, I want to applaud you for investing in yourself. I want to applaud you for putting time that you guys could have gone and fucking watched something mindless, and instead you invested it in yourself and your own education. So I want to applaud all of you, and let me know which cities you guys want us to pull up to. I'm trying to put together this tour as soon as possible. Don't flake. We'll put the whole thing together. Just let us know which cities. We'll make sure that we get this whole thing going. Happy 2023, people. Let's make it count. I believe in all of you. I support you in your journey to be your best self and to be an incredible trader, but make sure that you know that it doesn't come guaranteed. You have to commit with discipline. You have to commit with serious commitment of, I'm going to make sacrifices in these other areas in order to have this thing that I want. And as long as you guys are willing to make the right sacrifices and to have that discipline, you can be successful at trading. All right. Happy and safe trading, everybody. Again, my name is Roy Dunya, co-founder, Chart Addicts.